Most people believe building wealth requires staring at stock charts all day and guessing which company will explode next. The quiet truth is, people who spend just 10 minutes a year investing often end up richer. You open an investment account, and suddenly you face thousands of choices, confusing charts, and loud experts shouting conflicting advice. You want your money to grow so your future feels secure, but you are terrified of picking the wrong stock and losing your savings. It feels like you need a finance degree just to start, so your cash stays trapped in a low-interest account, losing value. Let us make this simple by imagining 3 sturdy buckets sitting on a shelf. You do not need to stare at these buckets every day or worry about market noise. You simply fill them with your hard-earned savings and let time do the heavy lifting for you. The first bucket is your home market index fund. Think of this as your primary engine bucket. When you buy this single fund, you are not gambling on one trendy tech stock or trying to guess next week's winner. Instead, you automatically buy a tiny slice of hundreds of the largest, most established businesses in your country. If one company stumbles, dozens of stronger companies step up to lift the total value back up. Let us say you have $3,000 ready to invest. You might place $1,800 into this engine bucket. As these companies sell everyday products and generate real profits, your money grows steadily alongside them. The second bucket is the International Market Index Fund. Let us call this your horizon bucket. Sometimes your local economy experiences a slow stretch, while businesses overseas are booming. By placing roughly $900 into foreign markets, you spread your financial seeds across different soils. You do not need to analyze overseas laws or track global news. This single fund collects thousands of overseas companies into one simple package, keeping your investments balanced even when local markets cool off. The third bucket is the Total Bond Market Index Fund. This is your shield bucket. Bonds are stable, interest-paying loans that you extend to reliable governments and major corporations. While bonds do not grow as fast as stocks, they remain calm during economic storms. Placing the remaining $300 into this shield bucket creates a protective cushion. When stock prices swing, your shield bucket absorbs the shock and keeps your whole shelf stable. Once a year, you spend just 10 minutes checking your 3 buckets. If your engine bucket grew rapidly, you simply move a small portion of those profits into your shield bucket to keep your original balance intact. This simple setup gives you complete peace of mind. You do not need to watch financial news channels or read technical charts. You simply let the natural growth of the global economy fill your 3 buckets year after year. The surprising truth that Wall Street rarely mentions is that professional fund managers who spend 60 hours a week trading stocks almost always get beaten by this simple 3-bucket strategy over 10 or 20 years. Complexity in finance is usually just a clever way to charge high fees. By owning everything through 3 total market index funds, you eliminate expensive mistakes, cut fees to almost zero, and capture the growth of the whole world automatically. You win by doing less. Real wealth is built through calm, automated consistency that lets you sleep soundly at night. Your first step can be small. Pick one low-cost index fund, start building your foundation, and let time work for you. If you want simple blueprints to grow your money without stress, subscribe to Clear Money Blueprint and let me know your thoughts in the comments.